Hi everybody, Ken Heinz here, HFR President with the November HFRI 500 Performance Update. November was an interesting month. Despite the fact that the HFRI 500 posted a decline, it also had significant outperformance of the broader equity market decline. And the decline for the HFR 500 and equities was really driven by, we saw a significant and sharp reversal of a lot of the trends from October. And this reversal was really driven by a panic, investor panic, related to the Omicron coronavirus variant and the spreading of that variant. We saw a reversal of what we call the reflation trade, which has now evolved to the inflation trade in the last few months. And with that, you saw the worst area of performance, or you saw the areas of CTA and equity hedge and macro leading declines for the month. To try to illustrate just how sharp of a decline we saw in November and how it was concentrated in the late part of the month, we used the HFRX Global Hedge Fund Index. The HFRX and the HFRX Global and the HFR 500 had similar performance for November. And you can see from this chart, it was actually positive through about the 20th of the month. And then as fears about Omicron started to set in, you can see a series of sharp declines really punctuated by what we saw on the 26th and on the 30th, bringing the index to a sharp decline for the month of November. As I mentioned in the previous slide, even though the HFR 500 declined in November, reversing some of October's gains, it did outperform the decline of the Dow Jones. You can see here the Dow Jones down 3.7 for the month, where the HFR 500 was down about 1.6%. You can see the two better performing areas, strategy areas for the month, include fixed income based relative value arbitrage, which was only down about 20 basis points, and event driven strategies, which was only down about 70 basis points. The higher beta equity hedge strategies declined about 1.9%. And this sort of speaks to what I was talking about earlier, how in addition to equity market declines, you saw a sharp reversal of a lot of trends, the reflation turned to inflation trends. And that's where macro declined about 2.5%, really led by the trend following quantitative CTA strategies, which declined about 3.5%. Also, despite the decline, there were a few bright spots in the HFR 500 performance in the month of November, really led by the HFR 500 equity hedge quantitative directional index. You can see here that index actually gained 2.9%. In addition to that, the relative value fixed income sovereign index gained about 83 basis points. You had a gain of about 80 basis points in the HFR 500 merger arbitrage, and finally a gain of about 0.75% in the macro discretionary thematic index. And you can see all of those well ahead of the decline of 3.7% for the Dow Jones in November. Taking a slightly longer view of time, we see that the decline in the month of November really doesn't change the overall performance distribution in the first 11 months of the year. You can see the HFR 500 performance was still led by the HFR 500 event-driven index, which is still up about 13.2%. You've got a gain of about 12.7% for the Dow, and then equity hedge fell to about 9.6%. Again, that obviously the highest beta area to the equity market declines in the month of November. And you can see the overall composite up about 8.8%. And then both relative value arbitrage, fixed income based relative value arbitrage, as well as macro up about the same 6.8, 6.7% for those two. And again, macro certainly in the month of November was impacted by the sharp reversal of trends in the performance in the quantitative trend following CTA strategies, whereas fixed income relative value arbitrage was the least impacted by those trends. We actually saw bonds rally as interest rates fell on flight to quality in the month of November. Drilling down one level deeper, and similar to my comments on the previous slide, you can see that the results in the first 11 months of the year really were not significantly impacted by the performance in November in terms of the overall leadership by sub-strategies. You can see here that the strongest area of performance continues to be the macro commodity index, which has gained about 27.5%. You see about 21.5% in the HFR 500 event-driven distress index. Again, both of those areas with very little amount of equity beta, and in the case of distressed, certainly idiosyncratic credit beta, but not so much in terms of interest rate sensitivity or even high yield credit sensitivity. It's more idiosyncratic, distressed. Finally, you have a gain of about 17% in the HFRI Energy Basic Materials Index. And I know we've talked about this index before. If you actually look at it back to where the rally started in the beginning of the second quarter, this has been the leading area of performance for sure. And that's following huge dislocations that we saw in March of 2020, right as the quarantine was beginning. Then you see performance of the Dow Jones up about 12.7%. And then finally, you have the classic traditional fixed income relative value or fixed income convertible arbitrage index up about 7.9% for the month. Finally, to wrap up for this video, we've got a ton of great information about the HFR 500 on our website, so please visit www.hfr.com. When you get there, the first thing we'd like you to do is to click on the Investor Guidebook, which has a ton of material and talks about how the HFR 500 is really a solution to many of the challenges institutions face when benchmarking their hedge fund portfolio. Since you're watching this, you know that HFR produces monthly videos on YouTube. And if you have a minute, please subscribe to the channel. Appreciate that as well. And then finally, if you do have questions or you would like to set up a call with myself, please feel free to send an email. You can send it to indices@hfr.com or HFR500@hfr.com, or you can send it to me directly, and we're happy to speak with you. Hope all is well. Look forward to speaking next month.